Hi, everybody. I'm Lynn Stout. I'm a director with the Live Events Coalition and welcoming you today to the Business of Events, our monthly education series. And this one was a passion of mine. I started as an event planner over 20 years ago and ran away from my bookkeeper and my accountants for years, not wanting to face the music, but certainly as our business has grown, I've become intertwined with all of them, and I realize what a great team and what an investment can make in a great team, and how they really can give you some sleep-filled nights. You don't want sleepless nights, just knowing that cash flow is going to be okay. And so today we wanted to start sort of big picture. I know it's been a crazy year with a lot of changes, and this is definitely not the year to risk doing things yourself. So I wanted to bring in two experts to talk to us a little bit, and we're going to start at sort of a 30,000 foot level. I'm not quite sure who is participating today, so I don't know if you're 1099 or you're looking for from an events company, like you're maybe an owner perspective, but I certainly hope we hear from you if you have specific questions, and we certainly can tailor this to answer your questions. But we're going to start sort of pretty high level and just sort of dig in a little bit. So I'd like to introduce Terri Sapp, who is the owner and manager of Currency Bookkeeping. And Terri, if you want to tell us a little bit about yourself and where you're from, I would appreciate it.
Well, sure. Thanks, Lynn. Hi, everybody. My name is Terri, and I am a bookkeeper. I have been for the past 12 years, but I am also a live events owner. My husband and I are the owners of Havoc Dog Productions Incorporated. It's an S Corp. We do lighting for concerts, conventions, and corporate meetings. So I am in the same boat with all of you, and I've been the LEC bookkeeper since July as well. So I'm very familiar with the organization and really happy with what we're trying to accomplish here. So thank you, everybody, for attending and for being a member.
Great. And then we also have Jeff Darling, who is the owner of Cooley and Darling. Full disclosure, Jeff is my insurance broker and has been with my company for years. So Jeff, if you want to give us a little background on Cooley and Darling, would be great to hear.
Yeah, great. Thank you, Lynn. This is a terrific opportunity. Really, really happy to be a part of this today. I've been insuring live events since 1993. So it's something that I've gotten very familiar with. Have had a great relationship with Lynn over time, and really looking forward to answering your questions today. But to talk about something that I think has become a really difficult and sometimes an interesting and sometimes difficult question for people. So Cooley and Darling specializes in production, or I'm sorry, in insurance for the live event production, event planner, the event industry in general. So yeah, looking forward to it. Thanks again, Lynn.
Great. So we thought we'd break today up just a little bit, and so we'll start with Terri kind of on the front end, and then we'll come back to Jeff on the back end. So Terri, let's start with you. This year looks pretty different than years past, and I know you're going to give us a little overview of sort of some accounting basics, but how's this year's tax filing going to look different for many companies?
Well, again, not knowing the specifics of our audience today, but I know personally I've bumped into a lot of business owners who really, as long as they have money coming in and as long as they don't owe too much on their taxes, they're happy campers. And the bookkeeping accounting side is really just a struggle every January. And other than that, it's not really a part of their everyday life so much. Of course, over the past year, all of a sudden we're asked to show our financials over and over again. If you want to apply for PPP or EIDL or some sort of a grant that's maybe available to you locally, you have to have clean current books for every single month for the past 24 maybe months and moving forward. So I think for a lot of us, we need to do maybe more prep work and continual maintenance than we used to be able to get away with.
Got it. Great. Well, do you want to, I know you have a few slides for us, so if you want to sort of talk us through what you shared with me earlier, that would be great.
Okay, can we pop some of that up on the screen? So my first big point that I really wanted to talk about today is that this is not the year to go it alone. I know particularly a lot of our 1099 contractors are used to doing their own taxes, say TurboTax or whatnot, and they're comfortable with that. But honestly, you really want a professional in your corner right now. The truth of the matter is they are going to catch more than the software would, okay? TurboTax and the like, they ask you certain scenarios, but they don't dig the way a professional human being would. So please, by all means, don't be afraid of the cost, because I do think it'll be worth it. Not only because they can help you in your current situation, but then you'll have established a relationship with somebody who you can call 3 months from now when they spring the next thing on us, and you can get personalized advice about that. So let's flip on to the next slide really quick. I just want to explain, I'm a bookkeeper, not an accountant, and nobody knows the difference. That's okay. I didn't used to at one point in my time either. A bookkeeper is kind of like the nurse, and your tax preparer, which would be a CPA or an EA, they're like the doctor, okay? So you can come to me to organize everything. I can check your vitals. I can tell you key indicators if something is not looking maybe the way it should. But then come tax time, you do need a CPA or an EA to actually file that for you. So that's kind of the difference there. Let's go on to the next slide, please.
Terri, can I just ask a question? Can a bookkeeper not file your taxes for you?
That is correct. Well, now some bookkeepers are also certified as enrolled agents. That's what EA stands for. So you'll find some people happen to do both, but as a bookkeeper, that is not in itself enough credentials to file taxes.
Got it. Thank you.
Great question. So right now we're all sort of funneling into the tax preparer's office, right? And I think one of the biggest misconceptions is people think, I'm just going to hand my tax preparer everything and they're gonna work it out for my greater good. And I hate to overgeneralize, but the truth is I've spoken to many accountants, and guys, they're just so busy that a lot of them are going to take whatever numbers you have and plug them into the form and keep going. But as a bookkeeper, I see a lot of financial records that are incorrect. Okay, I specialize in using QuickBooks Online, and every now and then you'll get a warning message that you've done something wrong. But there are plenty of other things that can go wrong that are not obvious unless you have an intimate knowledge of those books. So my advice to everyone is to please prepare your financial information very well before taking it to the tax preparer's office. I can tell you they tend to charge $200 and up an hour. So you do not want to pay for time spent cleaning your books. You just want to pay for time spent getting you the best you can get, right? Okay, good. So let's keep on moving then.
Terri, is there a baseline of what you want to see? Is there a way that people can come in as prepared as possible? Are there, if they're not using QuickBooks and can just give you a file, what do they need to bring you for you to get up and running?
Sure. A lot of people will call this indexed financials. Essentially, you want to think of every spending category you have. Think of it of buckets like office expenses and utilities and insurance. What you want to do is come up with a tally for the whole year, what you spent in those categories, and then maybe behind it have all of the bills and receipts to prove that. So that's a great question. If you're not currently using an accounting software, you're going to have tons of stacks of paper or files, since we're digital now. And it's all going to be tallies with supporting proof, tallies with supporting proof. Yeah, you're going to do that for all of your expenses as well as for all of your revenue.
Got it.
So then you can kind of check yourself through your books before you hand them in, or whatever you want to call your financial documents, your shoebox. First thing is you want to be sure you have separated your personal finances from your business finances, and that includes assets as well. So first question everybody asks me, well, what if I use my personal vehicle for business? Okay, well, the vehicle won't belong on your books, your business finances, but you will be able to deduct a portion of the costs for the vehicle. And that is something you want to talk with your accountant about. So one of those stacks of paper you have is going to be all of your mileage, all of your auto expenses. That way the information is there so you and your CPA can talk about it. I'm going to tell a little dirty piece of laundry here. When I first started, this is probably why I decided I needed to learn to become a bookkeeper. Eventually got certified and kept going with it. But my accountant set up my books for me, and I did not realize that there was one account called computers, and it was for equipment, like so my husband's lighting boards and a couple of large things, right? And then there was another account called computers, and it was an expense type account. So at the end of the year, the accountant said, wow, you guys have $30,000 of computer equipment. That's amazing. And I said, no, we don't. And that's because I didn't realize throughout the year I was putting small things like charging cables and thumb drives into an asset account instead of an expense account. And these are going to have big effects on your taxes. So my piece of advice here is to make sure you really understand what assets, liabilities, equity, revenue, and expenses, what they are. Google it if you have to, and make sure you have filed all of your transactions accordingly. Does that make sense?
It does. There was a question in the Q&A, but these are great terms to understand and know the difference of, but also if we're talking about accounting terms, we hear P&L, we hear balance sheet. Those have been really important this last year in terms of PPP. And then Anna asks, is index financials different from P&L? So if you can sort of explain those three types of things that people are asking for, that would be great.
Oh, absolutely. Okay, so if you are currently using some type of a software, the balance sheet and the P&L, which stands for profit and loss, which is also sometimes known as the income statement, those should be reports that you can find in your software and pull up and print and share. Okay, if you do not currently use software, then what you want to do is look up an example, because a balance sheet, for example, is supposed to be placed in a certain order. First, you list all of your assets. So you list every single business bank account and what the balance of it is. And then you're going to do your assets. So any equipment you have and what the value of that equipment is, and so forth. So the question about are indexed financials the same as a P&L? Basically, if you have QuickBooks and you pull up a P&L, you should be able to click on all those amounts or links, and it will open up a screen that has all that supporting documentation I was speaking of, that if you were doing paper, you would have paper clipped all together. So I hope that makes that a little more clear.
Yep, absolutely.
Okay. I wanted to make sure, especially when we're talking about this past year, we all understand the difference between income and other income. Because if you're not in the accounting game, it's like, well, that's silly. What is that? Okay, so revenue is the same thing as income, right? It's any money coming into your business. But other income, those are going to be money you earned not doing the primary purpose of your business. So let me give an example. As I said, my husband is a lighting designer. So he's a service-based business. And if he invoices somebody for hours worked on a show, that is revenue, that is income. But if we received an EIDL grant, remember that was like the 1,000 per person you could have potentially gotten this year, that grant was not derived from doing his key purpose of business. It was something other. So that gets filed under other income. And the reason this makes a difference is on your profit and loss, your P&L, income is at the top and other income is at the bottom. And you are frequently over the past year asked for your gross profit, which tallies only the things at the top. So you don't want any of the bottom stuff affecting the top stuff and then making a difference in whether or not you get approved for something. Hope that gels. Okay. The other one that is similar is cost of goods sold. That's what that COGS versus expenses. Okay. Cost of goods sold are the direct costs needed to produce whatever it is you're selling or the service you are providing. So honestly, my husband does not have a lot of those. The easiest example would be, let's say maybe an event producer who the end client is paying the producer and the producer is getting a DJ and paying the DJ, right? So part of what I sold to you was included a DJ. The DJ is going to be a cost of goods sold. The expenses are other things, kind of like overhead costs. Those are going to be like your internet and your Microsoft subscriptions and your pencils and pens, okay, your insurance. The reason this is important, and I know it happened with the EIDL, when we were all going for that, we had to list our revenue, and then we had to tell them what our cost of goods sold is. And I'm aware of a lot of business owners who didn't know the difference between cost of goods sold and expenses. So they bundled it up together and it presented a less positive picture of their business and possibly led to them getting denied. So please be sure that you do understand the difference between cost of goods sold and expenses so that you can file them appropriately. Yeah, do we have any questions about that? I know it's kind of a lot.
No, and I don't want to sound silly, but I do have a question about gross versus net revenue.
Yeah.
So I think the EIDL was based on your gross revenue and not your net revenue. And I'm just wondering why. I mean, obviously that was better for everybody, but.
Well, first, go ahead and flip me to the next slide because I have a couple of formulas here for gross revenue versus net revenue. Okay, there we go. So over the past year, for the various things we've been offered, they've asked us for different things, like you just now said, the gross revenue maybe versus the net and things like that. So my first point is make sure that you can produce any of these for any given month so that you're ready quickly. And now, why did they ask that? I could not 100% say, but what I can tell you, if you'll see there, gross revenue, so that's all your sales coming in, minus COGS, your direct costs, equals gross profit. So gross profit really demonstrates how much money you get to keep for every sales dollar before your overhead costs. So at least when you're going for a loan like a mortgage, classically what they'll tell you is this is the number that tells people how efficiently you run your business, what sort of profit you really get off of what you're selling. And obviously lenders and investors, they're very concerned with making sure that you do run a tight ship and you do realize as much profit as possible. So again, I couldn't say exactly why they said that, but that's a potential reason.
Got it.
Good. So at all times, we want to know what our gross revenue is. We want to know what our COGS is, therefore our gross profit. Now, net profit is then when you go further and you take out all the expenses, the overhead stuff I was talking about. They've not asked us for our net profit much, but as long as you're doing all this, you should probably have it. And the last piece is, as a business owner, don't you hate it when somebody asks you what your personal income is? I hate that one because it's like, well, here's what my business makes. And here's what my business makes after, expenses. And then here's what I pay myself in payroll, but I'm an S Corp, so I also take a distribution. It's a dizzying amount of numbers. And so I just suggest, especially in these times, that you have this number for every single month, every quarter, and every year for the past year or so. That way you can spit it out at a moment's notice.
Got it.
Cool. So thank you for showing this one as well. So a lot of people say, well, can't I just prepare my books on my own? And absolutely you can. And if you have questions, I would love to help you with that. And some people say, I don't want to have a thing to do with this. Or I'm just too busy to learn how to do this. And that is where a bookkeeper comes in. So as the LEC bookkeeper and someone who wants to support this cause, someone who wants to see our events companies survive and thrive, I do have some discounts right now for people. If you just want to start up, say you've never had accounting software before and you want to get started on the right foot, I can do that for you. Or if you have a set of books and you would like somebody to look over it and inform you of maybe anything that's not being done to your best advantage, I can do that for you as well. And then if you want to continually have your books maintained on a regular basis, I can do that. I have discounts for you, and I'm just open to your questions.
That's great. I have a few more questions. So from a corporation standpoint, because I'm an S Corp as well, but many people are LLCs and sole proprietors. I mean, there are lots of different. I know that corporation taxes, I think, are due March 15th, but April is sort of business and LLC taxes, I believe. Is there any, why would you take an extension? Why would you need an extension for your taxes?
That's a super question. And I just saw earlier today the dates that they've been extended out to. Gives us a lot of extra time. So right now, we're all kind of pending on this new legislation that's hopefully going to come out by, say, April 15th or so. And it may directly affect your taxes for the year 2020. It is always easier to extend than it is to go back and amend later. So for example, the treatment of PPP, some of us have gotten it, some of us have gotten it forgiven, some have not. And in terms of the PPP, the longer we go, the more they kind of sweeten that deal. They've made it easier in terms of your reporting requirements for forgiveness and whatnot. So a lot of people are thinking, why don't I just wait and see if this new legislation, how sweet can it get? So that is one reason you might want to extend. Also on the personal side, for your personal taxes, you might want to hang out and see what happens with unemployment insurance. I know they are talking about trying to ease tax on that at the state level. So you might want to hang out and wait for that a little bit too. But I do suggest you find your accountant, have that conversation so that they know that you exist and they know that you just want to wait.
Got it.
Now, I am not suggesting everybody here wait and extend. I'm suggesting you weigh that issue with your accountant.
Right. I guess I have a question I'm not super clear on, but so say you had, you had contracts in 2019 and you typically would make, I don't know, $800,000, but all those contracts were canceled in 2020. How would you show losses on your books? I mean, it's not revenue that's coming in, but you lost all that business that you knew you were going to have, especially if you had a contract. How would you report that?
This is a fabulous question. Okay, this is going to depend first and foremost on whether or not your business does cash basis accounting or accrual basis, right? So some people are going to be like, I don't know, how do I know which one I am? We got to ask your accountant. You probably had to declare that when you first started your business entity. You remember you had to say if you were going to go with a calendar year or like a fiscal year. You probably had to answer this question at that time. Now, the majority of us are cash-based businesses. That is the most common. Now, here's the thing. Kind of got to break some bad news. In a cash-based business, you don't get to recognize revenue or expenses until they hit your bank account. So I'm going to use my husband as an example again. Let's say in January, he had 2 really big gigs and we sent the invoices by the end of January. They were due in February. Well, the invoices were out there, but due to the fact that he is a cash-based business, he does not get to write that by the way, they couldn't pay us. He can't write that uncollected amount off as bad debt because the amount was never realized in the first place because we are cash basis. Now, if you're accrual basis, the difference is you get to realize revenue and expenses the moment you send the invoice or the moment you receive the bill. So a lot of people all of a sudden are going, gosh, I wish I had been accrual based, because then I could write off my uncollected amounts as bad debt. This is another conversation with your CPA. It's possible they could help you with that. Some businesses go with like a hybrid model where some things are cash and some are accrual.
Can you do that? Is it a legal thing, like you have to be one or the other, or can you run two sets of books?
You cannot run two sets of books. All right. So you could talk to your accountant about, can I do cash for money out, but accrual for money in? My accountant doesn't want to do it, but I have heard of other people's accountants who are willing to go there. So that's definitely something to talk about. Did you know that countries all around the world, because of this, governments are moving from cash to accrual? Because they see how accrual would have been better for them in this situation.
Right.
We could talk for days about cash versus accrual, but one more thing though, what I do encourage you to do is, if you had any amounts that you had invoiced but were not able to collect, first of all, you got to get that off of your books. It can't just sit there indefinitely. So you're going to want to maybe write a credit memo to balance out, to net out that amount so that those people no longer owe you something. Now, some people say, Terri, can I just void it? I wouldn't do that, because then you don't have a good, clear record of what had happened. What if 9 months down the line, somebody says, if you have uncollected amounts, even if your cash basis, we'll compensate you for that. You're going to wish you didn't delete that number. So do a credit memo, move the money into a bad debts expense account, and then ask your CPA, can you do anything for me about this? Does that help?
Does help. We have one question. So how can I change my business model from an LLC to an S Corp for 2020? Will it affect PPP loan forgiveness?
Okay. There's a form you fill out for that. What is that? The SS120, or it's an S with some numbers. You're gonna file a form. How will it affect your PPP loan forgiveness? I got to tell you, I don't think that it would, quite honestly, but that's going to have a lot to do with how you paid yourself and if you were paying anybody else. But on the broadest sense, I don't think it would matter. Now, there is a possibility you might have to get a new EIN when you switch your business entity type. So that could be interesting. Then you would need to be in communication with your bank about that. Honestly, I don't have a hard and fast answer, except you just need to work closely with both your bank and your CPA to let them know what you'd like to do. But I don't think it's a bad idea to go ahead and switch. I would move forward with it.
And I have one more question, which is, if you own a business or you're based in, so say I'm based in Virginia, but I work in California or I work in Wisconsin, do I have to pay those state taxes too if I did the job there? Or what about in the virtual world, if I was doing the job from Virginia but working for a Wisconsin company?
Good question. So some states are a little different than others. In my experience, it's based on the state that your entity lives in. All right, so whatever your entity's address is, you just deal with whatever taxes go there. I know some states like California, if you go over there and work, they might hit you with an additional tax. Trust me, they'll let you know. But for the most part, it's just the state that you live in.
Got it.
Business.
I get the super deal because I'm truly a DMV company, because my office is based in DC, my warehouse is based in Maryland, and my home is in Virginia, which is where we've been basing operations. So it's been fun. Thank you so much, Terri. That was a really great sort of overview. And Tim says Terri is really great at hitting the basics. So thank you. Thanks to all of you guys who showed up. And now we're going to sort of switch gears just a little bit. And Terry's going to stick around in case people think of accounting questions along the way. We can always come back to it, and we can get as specific as you guys want to. And yes, we will be able to share Terry's slides if you're okay with that, Terri.
Yeah,
here I am just giving your topic away. And now we're going to turn it over to Jdarling to talk a little bit about insurance. Jeff and I have have been down a long road because I had a very extensive business interruption policy. So we worked that route for a very long time, only to be very denied. So you want to talk to us a little bit about the landscape? I know things have changed dramatically. We've got people with business insurance who weren't covered, and then you've got the insurers who now are covering everything under the sun and charging for it. So would love to kind of get the lay of the land from you, and then we can dig in a little bit.
Yeah, I've been the least popular guy lately, just because there's a lot of no answers. And I think one of the things that we all have painfully discovered is that insurance was really, and I'm going to sound like an apologist, so I apologize, but insurance was never meant to cover everybody at the same time. And that's really what business income losses became. They became something that everyone was experiencing at the same time. And if we put together the reserves of every insurance carrier domestically, they matched about 2.5 months worth of income loss by businesses in the US. So no one really wants the insurance industry to be completely bankrupt. There are a few that we'd probably like to do without, but by and large, it didn't. Now we are hearing talks, we continue to hear talks that there is legislation as part of or an adjunct to some of the legislation that has already passed, that there will be a federally funded or a federally backed fund to pay loss of income, and it may even be in retrospect. So everyone's familiar with terrorism. Terrorism came out of 9/11. Terrorism moving forward is something that's reinsured by the federal government. That's something that we're talking about right now, as instead of TRIA, it's PRIA, it's the Pandemic Reinsurance Act, and it is there's a potential that it will go back and pay some of the business interruption claims that businesses experience, but that's doubtful. It's likely to be something that is forward-looking only, and something that you can only likely purchase from the federal government. As you can understand, they really are the only ones. It's the only single entity that would ever be able to pay those claims. So the landscape has changed dramatically. And Terri, I'm glad you brought it up. Financials is a big thing that underwriters are looking for right now. It's something that if there's the single biggest change, people say, oh, insurance is going to be so much more expensive. We're not seeing that. We're seeing underwriters' appetites narrow. We're seeing things that they would insure before, they're not willing to do anymore. And as that capacity shrinks, as there are fewer and fewer dollars chasing new business, chasing these customers, then you find prices increase. But more than that, we're actually seeing underwriters walk away from business that they would have insured previously, and to an underwriter, to a carrier, they're asking for more financial information. They're asking for COVID disclosure notices. They're asking for specific impact. They want to know whether or not you received assistance from the federal government, whether that assistance is ongoing. So underwriters, insurance carriers really are trying to get a sense for how this has impacted really nonprofits, manufacturing companies, freight forwarders. It doesn't matter. It's touching everybody. So that's the single biggest difference now. I think one of the things that underwriters and our industry, your industry, is becoming aware of is cyber insurance. This thing that was out there for a long time. Everybody knew that it was happening, but it probably wasn't really first on most people's lists. When you're being asked to comply with a contract, it was always general liability. We wanted to make sure that you could protect yourself in the event that someone sued you if you injured them or damaged their property. And as an event production, in the event production world, that was paramount. That was, if you had general liability insurance, you were likely to be fine. Now people are switching to the cyber liability and the professional liability. And so cyber liability, I think we all understand it. There's first party and third party cyber. First party is somebody steals money from me over the internet. They get into my bank account with my credentials. I want to recoup that money. The third party is I've let records go. I didn't protect them well enough. and those records are gone. How do I get those back? How do I pay the people who have been compromised? So that's the cyber liability. The professional liability is different from cyber, and it is different from general liability. We find it a lot of times, and this is really, really popular now. This is probably the biggest change in what we've seen. We find it as a part of cyber liability. The professional liability is really, really simple. It's pure financial loss. So you haven't injured them, you haven't damaged their property, but something you've done or something you failed to do or something that happened. You didn't do anything, you didn't really fail to do anything, but something happened in the middle of your meeting and all of a sudden it's shut down. You have people, you're trying to get the signal back, you're trying to bring the meeting back and people leave. And that harms your reputation, your customer is mad, and they sue you. Again, that's professional liability, and it is likely a part of a cyber policy that you can get now. So those are the biggest changes.
Jeff, for a professional policy, so me as a virtual event planner, should I have that? But also my AV company also have should I be requiring them to have a policy for my events, or, or does my policy enough to cover both of us?
Yeah, requiring is a really strong term because you'll get some pushback from those guys that are technicians that, like Terry's husband that owned the soundboard, the lighting console there. It's all the same to them. And the professional liability exposure really is for you. I think it works best when everybody has it. Of course, the insurance guy is going to say that. But everyone should insure their own operations. Everyone should be able to evaluate their own exposure and have the backing of a large financial corporation, a large insurance company behind them. Yours is going to be enough if something happens. Remember, it's all about who gets sued. If the AV company gets sued and you don't, well, then it's not enough, but you're not worried because you don't have a seat at the table. If you get sued, we can talk a little more about, additional insureds and how we protect other people by using our policy, but yeah, yours is enough and you at a minimum should have it. It really is very important, particularly now as we talk about hopefully hybrid models, and then in person as we go, but there's still a professional liability exposure, but definitely right now, in the virtual sense, the professional liability is more important now than it has been in a long time. And Lynn, I think, you shared and it wasn't anecdotal at all. I think it was real life. Where something happened, and we've all heard stories of that Zoom meeting, the kindergarten Zoom meeting that gets interrupted by the teenagers down the street that are doing something lewd. Now all of a sudden the school district is in trouble. They're being sued again. They didn't injure anyone. They didn't damage anyone's property. It's that financial piece. Now my kid's got to go to counseling because of what he saw, and that's your fault. So anyway, those are the worst examples, but that kind of stuff happens. So yeah, professional liability for the event planner, absolutely. Requiring it of the AV guy is something different.
And then how, many of us, some of us have staff and have people that work for us, and many of us are solo event planners. What's it different? I mean, is there a standard package an events professional should have at the very minimum if you're a solo preneur, I guess, for lack of a better term, versus somebody who owns a company who may have 3 or 4 employees or 8 or 10 employees or whatever? What's the difference in the types of insurance we should be carrying?
So it varies. It varies by state. It varies by your, how risk averse you are. There are people that I run into all the time that have been doing this for years and years and years, and they'll retain that risk. They're fine with it. If something happens, if they get sued, they'll either represent themselves or they're going to throw the keys to the business to the people that are suing them and walk away. At a minimum, and again, we're talking really more about third party, how you protect yourself from suits that come in from others. Those are the expensive claims. Those are the ones where you're gonna have to have defense counsel if you get sued, and those expenses, those costs can skyrocket quickly, particularly these days. So at a very minimum, general liability, professional liability, and now we're going to talk about something that that most people just don't like to hear, but it's workers' compensation. If you have employees, most states will tell you there's no exemptions. If you have at least one part-time employee, you have to purchase workers' compensation. There are states out there, Virginia is one of them, 3 or fewer. If you have 3 employees or fewer, you don't have to purchase workers' compensation coverage. That just means you're not going to get fined. If that person's injured while working on your behalf, you're still responsible for their injury. So you're going to pay that out of pocket if you don't have coverage. So bare minimum, you want the general liability, you want the professional liability, you want the workers' compensation. When we get into or move out of, oh wait, one quick clarification. We get hung up on an employee and an independent contractor. For tax purposes, an independent contractor is something completely different. For insurance purposes, the litmus test is really, really simple. If they don't have their own insurance, if they're uninsured and they're a subcontractor and they're working on your behalf, they're your responsibility. So yeah, absolutely. The workers' compensation is important. And remember, if you don't have it, the company that's hiring you is paying their workers' compensation carrier for you because you are an employee. Whether you're an S Corp, an LLC, an individual, a solopreneur, it doesn't matter. You are an uninsured 1099 and they're picking you up on their taxes. So if you want to be more competitive, seen as a going concern, workers' compensation is super important. There's a whole suite of first-party coverage. And when I say first-party coverage, protecting your assets. So property coverage, inland marine coverage. Terry's husband knows all about it. I'm sure if you're transporting equipment back and forth, you absolutely want to have inland marine coverage that includes an income component. But again, those are things that are that no one really, well, that's not true. If you're renting equipment, you'll need to have a certificate that shows miscellaneous equipment. But otherwise, if you're just trying to get into a venue or you're trying to show someone that you have liability coverage that's going to protect them in the event you do something wrong and they get sued, the liability or the third party coverage is all we're really talking about. Yeah,
I still think inland marine is misnamed. I've worked with you for years on understanding what the hell it is.
It started out, there's marine and inland marine. It got off the boat, it was inland marine. That was it.
What about these companies like EventSure and, they're one-off insurance policies you can get for an event? Is that, I mean, should the planner have continuous coverage? I mean, what are we talking about? I mean, it's like $50, $100 to pull an insurance policy for one event. I don't know. I guess I just want you to sort of talk a little bit about the advantages to having, year-round coverage versus just pulling it when you need it.
Yeah, I mean, I think annual coverage does a couple of things for you. I mean, our rule of thumb really is if you have 3 or more events, it's going to cost you more to purchase an event over event policy than it is to buy it annually. If you buy an annual policy, you lock the pricing in. So you're not worried about fluctuations in the marketplace. And trust me, there are going to be fluctuations in the marketplace now. Carriers are distancing themselves from coverage all the time. The event space, particularly as we start to open back up, carriers are going to go wild. It's not going to be great. It's not going to be great for the rental and staging companies. It's not going to be good for the event planner. So locking yourself into a 12-month policy now, when things are a little more predictable, and insurance carriers feel like they're protected by virtue of the fact that some of these events are taking place in front of a computer screen and not at an event where they're really going to sort of test out this new herd immunity concept. So it's you really do benefit. Most of the EventSure policies or the event by event basis policies are very limited coverage. Customer service goes away when your policy expires, so it's harder to get in touch with those people if something happens. So yeah, I mean, I think when you buy an annual policy, and I mean, it's you want somebody that knows your industry. When you buy an annual policy, I'm not an attorney. I'm not going to charge you by the hour to call and ask me a question. So if you do have that, if you do buy that annual policy, I think you afford yourself or you avail yourself of some resources that are out there from folks like me that are familiar with yours. We can kind of match the insurance piece, the risk management piece with the live event production piece. And I think that's important. And when you purchase a single event policy, it goes away. And you really do lose that that resource. So we'll do either one. If you just want that event policy, that's something we can do too. But we recommend the annual coverage.
Jeff earned every penny of those phone calls when COVID hit last year.
Very nice.
Penny he's never earned from me, he spent up in phone time. Do we have any, as an insurance buyer or business owner, do we ever have any power with the insurance companies to ask for things to be included in our policies? I mean, can we go back and say, well, actually, we want coronavirus included, or actually we want, do we have any power when we are negotiating with companies?
So for communicable disease and COVID, no. I mean, that would be really, really difficult. It is it's seen as catastrophic at its worst, and most insurance companies, if you haven't gotten a notice from one of your insurance companies, whether it's a personal or commercial, you're going to. They're gonna send notice telling you that they are distancing themselves from any sort of communicable disease coverage, with the exception of workers' compensation, which states have said is the only way that those claims, those work-related claims, are going to be paid, which is workers' compensation. But you need an advocate, I think. I mean, you need someone that has a relationship with an insurance carrier or a group of insurance carriers that, again, not only understand what it is that you do, but understand how an insurance carrier works. And so, yeah, you do. We do, and again, I'm not the only me out there, but we do a lot of business with carriers that understand this industry, that have donated, to put people back to work, that are interested in furthering what's important to the event business, the event industry. And so having someone that's advocating on your behalf with these insurance carriers that understand the event space and want to help, yeah, absolutely. We have some leverage. Now, again, I can't call after an earthquake and say, hey, we want earthquake coverage. They're not going to let us do that. But yeah, I mean, I think there are things that we can include, exclude, that are, you want someone to tailor coverage to what it is that you do. You want them to know not just your address and your name and your phone number, but you want to know your venues. You want to know who your vendors are. You want to know what you specialize in, because that holds a lot of sway with an insurance carrier. The more detail that an insurance carrier gets, the more they understand you, the more likely they are to acquiesce to some of those concerns. And you want a broker that has a relationship and understands what you do, that we can go and ask those favors and get them done every once in a while. So yeah, you do, you do, and you should. You should find somebody out there that understands what it is that you do from an insurance perspective. Just like you want, and sorry, Terri, I'm picking on you, but just like you want Terri you want her to know the ins and outs of your business. She can only help. That's the only way she can help you. That's the only way that she can do something for you that's different than somebody down the street. And so I think that's really, really important. So yes, finding the right person means you do have some sway.
So you're saying I shouldn't fight my insurance census every year?
Well,
I was very surprised when I got a census and they asked these very detailed questions. I thought, like, once you did it one time, but they do it every year. I have a question here from Anna. What new or existing insurance will we need to consider for in-person events when we are able to gather again to protect event planners against COVID-19 related risks?
Yeah, insurance carriers are going to ask you, and we developed this through the Producers Guild of America, and we're working on one right now through ESTA. We're working hand in hand with some of the live event associations, production companies. We work closely with Avixa doing the same thing to put together what is a accepted protocols for in-person events. And I'm sorry to say this, I really wish that I had a better answer, but you're not going to buy communicable disease coverage from an insurance carrier for quite a while. Now, there are some exceptions, and you definitely need to ask your broker. There is just for instance, this is not the nonprofit world, but Alliance of Nonprofits for Insurance is a carrier that we do some business with. They're selling a product right now for communicable disease liability, communicable disease for liability. So if you're sued because someone feels like or contends that they got COVID while at one of your events, they're selling a sublimit for $250,000. The pricing starts at $5,000 for that. So that's pretty expensive based on what we're seeing, but it is available and it's out there. So that's out there. The in-person events, you absolutely, if you have employees or uninsured subcontractors, you want to get workers' compensation coverage, because if one of those employees says that they got COVID while they were working on your behalf, workers' compensation covers it. There's no exclusion on a workers' compensation policy for communicable or for COVID. It's included. Injury or illness while working on behalf of the employer or the first named insured is always going to be covered. And states have mandated that insurance carriers not back away from or water down that coverage. So yeah, absolutely. And that's been around for a long time. But ask your broker specifically about communicable disease. Ask them for some sort of risk management or safety manual. And we're working on one right now that can be published en masse. But ask your broker for for some specific things, whether they're tying into the CDC. Ask your broker for some risk prevention manual or protocols and procedures that you can employ when you go back to live events for your employees and for the attendees at these events, for your customers. Being the ones that go in with that safety mindedness, I think is going to ring very, very positively with your customers, and it's going to save you, it's going to save you an argument with your insurance carrier downstream too. So not just insurance, but risk management. Remember that stuff, which you retain.
Does it help our rates if we come to you with a risk management plan?
It absolutely does. It absolutely does. And so here's the thing. You're going to be, a lot of insurance policies are what are called duty to defend. So an insurance carrier has to defend you, to have an obligation to defend you until which time they determine that the allegations made against you are not covered. They are either true, the allegations they made are true, and there's an exclusion in the policy. But up until that point, most carriers, most policies are duty to defend. So they have to defend you. If you come to them and say, look, we've got this beautiful, protocols and procedures in place. We train our employees. We talk to our customers about it. We are risk averse. We are proactive in doing this. An insurance carrier is going to see that as time out of court. They're not going to have to defend you if something happens. And yes, that is very, very valuable. Great point, Lynn. That's something that, and again, I don't recommend somebody taking someone else's protocols and procedures and saying, look what we have, because if you don't use them, that can actually backfire. But take 15, 20 minutes or tell your broker to do it. I mean, say, hey, look, insurance broker, we've been paying for something we haven't been using for a long time. I get that all the time. It's frustrating. Anyway, help me.
Yeah. We got another question. Any thoughts on the practicality of guest and vendor COVID waivers and the release of planner liability? Will it hold up?
Not an attorney. And can't really tell you in specific states. I guess I would turn the question back to you and say, would you go to an event where you had to do that? I don't know. Maybe some people would say, yeah, fine, I've got the vaccine or I've got the antibodies and I'm not worried about it. I'm in great health. I honestly believe that there is legislation on the way that will provide some liability protection for businesses that have no way to avoid it. And you don't. Restaurants don't. Rental and staging companies. The event space has a really, really difficult time avoiding claims from COVID. But you still have to generate revenue, and we all want to get back to the face-to-face. I'm craving it. I think everybody that I talk to is. So I do believe that there's legislation coming that will protect you in the event that you're sued for something like that. And so I would keep it on the shelf. I wouldn't be the first one to have folks sign it, and I would talk to your attorney and find out if they feel like it's enforceable in court. It may or may not be. I don't know.
Okay, I've got one more quick question for you, Jeff, and then I've got one. Emily has been waiting for a little while for one more accounting question. So let me ask Jeff really quickly. Explain what a broker does. How are you working on behalf of the client? Are you working on behalf of the insurance company? Just tell us sort of what we would expect when you go to a broker.
I work for you. I work for you. I'm a broker. I'm not an agent. So there's a difference between an agent and a broker. An agent is a State Farm agent, for instance. They work for State Farm. I mean, their alliance, their responsibility, their I wouldn't want to say loyalty because that's not really true, but they work for the insurance carrier. I'm a broker. So my responsibility is to you. I spend as much time, and this is true, I spend as much time in your space as I do in mine, and that's the only way I'm effective. And my insurance carriers see me differently. They want to know that I have an expertise. They want to know that I know something about what my customers do, something more about what my customers do than they can learn on the internet, or that they want to know that I've spent time on a show floor. They want to know that I've spent time in these contexts, meeting people and trying to solve problems for people. That's very, very important. So I work for you, and I don't bill hourly. And I'm afraid a lot of people don't avail themselves of the resources that are provided to them or should be provided to them by their broker and their insurance carrier. I mean, the insurance carrier, they love hearing from customers saying, "Hey, I'm really worried about being out in public with my crew and my folks and my attendees. And do you have any resources that I can use? Is there anybody that can come out and help us? Is there anybody that can come out and train us?" Those resources are available free of charge, and for the most part. So I'm a broker. I work for you.
Great. Okay, and then thank you, Jeff. That was amazing. If anybody has any follow-up questions, we're happy to funnel them and connect you with both Jeff and Terry after this is over. But Terry, Emily asked for postponed events with a final balance payment moving to another year. Any way to record that loss for the calendar year? It's not bad debt, it's just extended debt.
Sure. So are we talking about a client paid you, or you owe the client?
So it's a postponed event, and so she's probably gotten paid a portion of that event in 2020, but it's been postponed until 2021, and that final payment is being made this year.
Sure. Sorry, if you reasonably expect you are still going to be receiving that money, then keep it on the books as usual and give your accountant a heads up about that. I was going to say, if it was the opposite, if you had collected a deposit from somebody that you still hold, that is a liability on your books. But it sounds like this is the reverse of that. So yeah, just keep it on the books then. Don't try to move it yet.
Okay. Jeff, one more for you from Steve. You talked a little bit about this earlier, but could you recommend cyber insurance? Would you recommend cyber insurance for the virtual event folks in addition to E&O?
Yeah, and I think we're seeing carriers right now who are so interested in what it is that you're doing that they're selling them together. Because if you think about where your errors or omissions fall, they fall, at least in the virtual context, they fall virtually, they fall cyber. So yeah, I would absolutely. Here's the thing, whenever you're in the context that we're in right now, you are gathering data, or you're using a program that's gathering data, and you are creating a digital footprint, you're also creating a digital pathway that someone who's on your laptop and you don't know about it, some malware that you're carrying with you that hasn't been activated yet. You're asking people, you're asking customers to trust you digitally. And so if you're creating that footprint, you're creating that pathway, and you could potentially not only create issues for your customers, you could create issues for attendees. You could be responsible for the release of records. We had a customer just the other day, and this has happened multiple times, but just the other day, walk into a customer to do an event for them or to do a proposal, logged onto their virtual private network and shut the whole thing down because they've got something on their laptop. I'm sitting across from you. You look really nice. You open up your laptop's got something mean on it, and now you're in my network. And at the end of the day, no one wants this to happen, but you will get sued. I mean, particularly if you've created this this digital forensic issue for your client, they're going to come after you. So yeah, I believe you should have both.
Great. Well, guys, thank you so much. I think this was exactly what I was looking for. I wanted just a great big overview, and certainly, you know, if people have questions, they can reach out. Jeff is with Cooley and Darling. I put his email in the chat for anybody who's interested. Terry's with Currency Bookkeeping, and her website and her email are both in the chat. But again, you can reach out to Live Events Coalition and we'll get the information out to you. Thank you guys so much for showing up, and thanks everybody for tuning in today. We'll talk to you soon. Thank you.
Thank you.